Good morning, everybody. Good morning. How's it going? How is it going? Whew, I tell you, so ASML, if you're not familiar, reported earnings. We have, tech coming out this week, kind of starting earnings and all that stuff. And, we got Netflix today. But the important thing here, ASML, right here today. They reported before the opening yesterday, Wednesday. We got TSMC today, but they I don't know how I didn't pick my words. I guess before I kind of had this plan, but so the big thing here that they reported. Let's let's look right here. ASML sales to China surged ahead of the export controls. But look at this. Look at that number right there. Like this used to be 46% of their sales. Of course, they surged because they knew that the Dutch government was banning sales and exports to China. So now they have 8% of their sales. And Taiwan picking up some of the sales. But what happens if there's a conflict with China and Taiwan? Um, that sales didn't defer over here, and they are the sole maker of chip producing equipment for the high end chips. We're talking like the Nvidias, the AMDs, all these chips that you hear about people designing that they don't make themselves, like Apple. They don't own their own chip fabs. Well, that's chip fabrication facilities, and these guys make ASML makes the chip fabs, and they're the sole worldwide producer of the high end chip fab equipment. The sole. Yeah. So 8% on Q1 versus the 46% before. So there you go. You got this slide. And it's interesting. So how's this going to shake out as far as, I mean, this is like a canary in the AI glitch works problem here. Now, if AI runs on the chips, and then we're gonna expect wicked demand over the next 20 years for data centers and all these things, then it's gonna be kind of an interesting problem. I also think that data centers may move off of off of terra firma and up into space where they can get the cooling and you can run solar power and all that sort of stuff. So that may be a huge thing for SpaceX right there that nobody's even thinking of. They've built this internet thing, and they just now put like the space station on Starlink, and now you have high speed internet available to things in space because of Starlink. This is a whole interesting, different twist on data centers and the direction of this thing. I don't think most people are kind of visioning where we're going here. Um, you know, heat is a huge problem for data centers, but what if you can put it in space where there is no heat problem? The cooling, maybe like, well, the cooling, there's no vacuum, so there's no convection. I mean, but everything's basically at zero. It's frozen. So it's be a whole interesting thing, I think, as we move forward. Where are the AI data centers going to be? I've already been seeing reports that like we're probably like with the current amount of data centers we have and the projection for AI in the next 20 years, we're probably like 1% of what we're going to have. So this could be opportunities in data center real estate investment trusts, data center building companies, data center management companies. It's a whole interesting thing, but this all starts with a chip production though, and right now they're trying to change, trying to limit China. What's going to happen though is what they're going to do is motivate China to create their own chip fab company that's going to build this equipment. They're going to R&D the crap out of this and take over. And then if the rest of us don't keep up, then it's interesting. When you put the back against the wall, nothing to lose. You know, as they say, this could be a serious canary in the glitchworks problem here. So all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, intended to be informational, educational, fun, and entertaining, is not a recommendation to buy or sell any financial instrument or anything else. All right, no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. They all involve a substantial risk of loss. And don't buy stuff from people like me. All right, don't buy stuff from gurus. Don't buy. Make sure you trust them. Don't fall for a sales pitch. And you know, all these slick presentations, you know, creating FOMO in you. That's fear of missing out. You know, if you watch a sales thing, you're like, oh my gosh, I'm missing all the win rate, all the everything. Be careful. It's probably the pitch is probably designed to invoke those emotions in you and get you to act. And it's not just financial stuff. It's all sorts of stuff. I mean, it's crazy out there. And if you desire personal financial advice, you need to hire and consult a financial advisor. Make sure you trust them. And I mean, most people out there are just trying to make some of your money into some of their money. And we have the jobs report coming out today, basically in line. No big surprises. Previous was 212. This one's 212. Do you think we held the exact same number week after week? Pfft. Manufactured. Completely make-believe. Anyway, the number is what they want it to be. That's pretty much, you know, all the adjustment factors, all the things. They took I don't know if you saw the gasoline numbers. They revised that seasonally so that there was no increase in gas prices. What? I don't know about you. Gasoline prices jumped 60 cents here local. I paid $2.70 the last time I filled up. I was driving by today. It was like $3.40. I was like, that's 70 cents. Holy. And you got to be careful out there. Things are getting crazy, and they're just lying to us, like straight up lying, and nobody's calling them on it. I mean, it's like, oh yeah, they lie. I mean, where does this all stop? I'm trying to call them on it, but you know, I'm just one voice with 4,000 subscribers, and if you like anything I say, make sure you thumbs up it so that it goes out to more people. I mean, golly, man, golly, this is just nuts. Just nuts. I mean, when does the lying stop? I mean, never, apparently. Anyway, let's get into it. S5FI, almost to the bottom. Been only looking for this since December. Here we are 4 months later, almost 5 months later. Almost there. Almost there. This bullish run we had in the S&P was among the top 10 from 1950. Like among the top 10 longest bull runs, bullish moves without a pullback since 1950. Made the top 10. I don't know about you, but I wasn't around 1950. That's a long freaking time ago. And I know some of you probably were, maybe. But that was a long and powerful move up we did in the S&P right there. And we're hanging out right here, trying to do this gap fill. It looks like S&P 500 did a big gap up right back here in February. It looks like we're trying really hard to go fill that gap. Now, if we get below this gap, roadmap line could come into play. And this move down, though, is getting really extended, as evidenced by S5FI right here. The stocks above the 200-day, interestingly enough, did a little bounce yesterday. That's interesting. The roadmap line has no real bearing on this. It's just a giant oscillator. Any bounce on the roadmap line on this is just kind of coincidence, I believe. I mean, maybe it has salt, maybe it has some substance to it, but since it's just a giant oscillator and the roadmap line is kind of designed for trending things, I don't necessarily think that it matters, but maybe it does. I don't know. It seem to have a lot of support and resistance right there. It's not going to do the roadmap bounce and go to the 1272 extension because we're kind of limited by the 80 and the 20 down here as far as percentage of stocks above the 200-day, similar to S5FI. But if I turn it off here, it turns it off on all my charts. So S5TW, though, this one indicating that a bounce is imminent in the market. All right, we're bottomed out. Stocks above their 20-day. We can hang out here a little while, but typically not longer than a week or so before we come jetting back out off the lows here. So we've already been down in here for essentially 3 days. We don't typically hang out here longer than like a week. I mean, you can roll back through here and look. This was a prolonged period back here in September when we were all bummed out. September 22, not September 23. You know, that 1, 2, 3, 4, 5, and then started coming off the bottom. That's about a week. 1, 2, 3, 4, 5, and then we're shooting back off. So this one indicating that things are a little over bearish right now. Overly bearish. Now, could we do a double dip? Yeah, absolutely. But look, I mean, we shot like 1, 2, 3, 4, 5, 6, and then shot up all the way up here. Came back for a double dip. That was approaching the bottom in September of 22. Already talked about it once. I mean, look, 1, 2, 3, 4, 5, 6, 7, shot off, came back, made a higher low, and then shot up to the top and hung out there for a while. So we hang out at the top, but we don't necessarily hang out at the bottom. Interesting to me. And let's see if I can find the other. I guess I closed it. Looks like I don't see the other tab. This one's interesting right here. Bank of America runs one of these. CNN runs one of these. Look at that. We're down in the... We're not at extreme fear, but we're in the fear zone. This is the place where we hung out in greed and extreme greed for quite a while, but we don't tend to hang out in big fear for long before we pop back up into neutral or greed. So just throwing that out there as a potential warning. We may see a bounce, and it doesn't necessarily... This one's not necessarily going to lead us to a higher high. It could just be a 618 retrace. Yeah, what does that mean, JT? Well, let's jump down the time frames just a little bit, clean up a couple things. Right there, that low. Delete that one. So that means this resistance right around the roadmap line and the 618 right in there would be the potential place we would rally up to if we're going to rally right up in this zone. Right up in here. And then we could possibly turn down again and make a move on down, possibly to the roadmap line even on the daily chart. So that support, hey, I move these every single day and they move right back. God, love it. And save. Save yourself. Anyway, so we could be looking at a move down to 4,800, possibly. There's the market open. See what actually happens. You know, ES overnight was basically dead. I mean, it didn't really do anything overnight. Look, closed yesterday. Just messed around. Didn't even, you know, very non-committal. Oh, look at that. That's a closed position for those of you that got that alert in Discord. NQ, very similar. Trading inside that end of the day move. That was what caused this spike yesterday? Anybody know? Anybody know what they blamed it on? It was on the potential that we're going to put Venezuelan oil back on the no fly list. No more Venezuelan oil, and which means that we would have to control oil prices. We're going to have to do strategic petroleum reserve releases, Well, they didn't fill that thing back up, so I'm not sure where they think how we're gonna manage this. I mean, you already drained it to the lowest level we've had in years, and then we have a minimum that we're required to keep by treaty, and the slush is not very big. So I'm not sure what the plan is here. Not sure at all. But looking at the daily chart on oil, we came back in, broke below the support zone. Roadmap line comes into play. As I said yesterday, we're now in the zone where if we don't bounce right here, we're coming on down to this 80 area right here. And we got close already, 81. So yeah, that's right down here. 79 is not that far from the low we already spiked. But if this is a spike reversal, we could be shooting right up to that 90 zone right up here. Some interesting developments in. I don't think the charts move via news. I'm just kind of sharing what's out there. So just that spike in the ES and where we shot up off the lows yesterday all corresponded with the Venezuelan news on the oil. And oil kind of took this crazy move, and it was more, I think it was more evident. And they were showing in the Brent chart yesterday that big spill right there. That big spill. That move down was that Venezuelan news right there. So GC, looking at the daily chart, still, I mean, that's a strong candle so far today. Still having a bit of trouble getting through that 618. Yesterday we rejected, gap down overnight, and the 1 hour the market, the futures market was closed. We had a nice big fat gap down, and trying to reopen, trying to reignite this breakout here. And on a 30-minute chart, this thing did kick off a roadmap bounce right here. Looks pretty strong. Going higher, and it kicked off a smaller one right here. Kicked off right here, so potentially going up to 24.23, 24.37, possibly 24.78 if we do the bigger move. Looks pretty good right now. How could you play that? GLD is an ETF for that. GLDM is a lower fee. If you're concerned about expense ratios, GLDM has a lower expense ratio, but it also has no options. So if you want options, GLD would be a way to play. Bitcoin, working on finding the bottom, and we are just days away, or just 1 day away. Tomorrow is the halving. Tomorrow is the day. If I've been boring you to death talking about this, we are just down to about a day and 9 hours. So about 222 blocks left. It's funny, about the time I went to bed last night, I saw it was like 300 blocks left. So getting down there, getting closer. It's coming. Have a party. Now, halving event itself, not necessarily bullish. It just fundamentally changes Bitcoin supply rate. All right. We have a subsidy for finding a block. Right now, that subsidy is 6.25 Bitcoins per block that gets authenticated, block of transactions. Blockchain, you've heard blockchain technology. These are blocks of transactions that each one relies on all the prior ones. So it's a chain of transactions, and that way you can account for all the Bitcoins all the time. And for authenticating a new block of transactions, right now the subsidy is 6.25. After tomorrow, after the halving event, after we get down through 220 more blocks, the new subsidy is going to be 3.125 for the next 210,000 blocks. And then, which is going to take about 4 years. So in 2028, we'll drop from 3.125 to half of that, or so it's like 875 or something like that, or 1.6265, or I don't know what. My math brain's not working this morning. Just dial tone. So there you go. That's what we're looking at right there. And if you want to see these pages. Mempool.space is this one, and bitcoinhalving.com is this one. Bitcoinhalving.com, powered by Bitcoin Magazine and Kraken. All right. Everybody cool? Moving on. Moving on. Moving on. There goes SPY down. Yeah, back down to flat. Back down to flat. We may gap fill. I mean, it's entirely possible. Can we rally? Or do we keep chugging on down? So, there you go. And trading SPYs is, I hate to call it stupid, but it's kind of stupid to trade SPY because you have fees and things you pay for. So you might as well trade SPX or XSP where you get tax advantaged. You may be like, well, I'm in an IRA and it doesn't matter. Well, there's no early exercise in XSP. So if you're going to trade options, you might as well trade XSP. Maybe like, but there's no liquidity. There is absolutely liquidity. And it's 1 for 1. You just divide by 10 and that's the price you get off of SPX. So, and this is delayed, so it doesn't give you the live price. Hadn't started yet. It's like 10 minutes delayed. Alrighty. Moving on, moving on. Russell. I think I skipped that one. Look at that, baby. Right down to the roadmap line. Can we find support? If we break down, probably heading on down here, 1800. If we break that, probably going on down to 13, possibly 15, 13 to 1500 area. And why would I say that? Let's just do this real quick. Remove all the drawings. Look at this. Do something bold. Right there. That low is the lowest low. That high. Look at that, 1300. All that is making this move down and echo right off of that high. Why that high? That high? It's just using the regular fib tool. Look at the 618 level right there. Look at what we held and rejected right there. This same pattern I look for all the time. Market roadmap pattern and the fib pattern. You know, basically all the same pattern. And if you want to know more about that, link is in the description. But I do have free videos. Like I just give you everything. So there you go. And there you go. All right, Dieseler. Question is, why am I so bullish on miners? I pulled this up a couple days ago, and let's see if I can find it. Give me 1 second. I got to roll back in a chat with my copywriter. Which, if you're watching one of my sales presentations, they're all written by copy people, which write advertisements. So let's talk about something really quickly. Why would I be so bullish on miners? Look at this right here. So this right here is the last halving in 2020. May 2020, right here. This is Bitcoin coming into that halving. This is the miners, Riot and Mora coming into halving, right? Down a lot. Kind of sucky. Everybody's like bummed out on them, right? Really sucks. Bitcoin's up. Why would you be in miners? They suck. They're going to lose a bunch of money. It's going to be so expensive for them to mine after the halving. Blah, 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 right? Down a lot. Beaten down. Kind of like what we have right now. Right? Everybody agree? Yes? No? Maybe? Let me pull up the second chart. Just wait for it. Look at this. This is after halving. The halving event, that little white line I had on the last one, right there. That was halving, 2020. Same colors. Bitcoin is down here. Mora and Riot performance up here. Mara is the green. That's after halving. Why am I so bullish? History tells me this is why I'm so bullish, all right? This is going to take 12 to 18 months to possibly play out. Once we get to the peak, though, it's game over. Game over for a lot of miners, probably. I don't expect them to be able to hold on through the next halving, carrying the debt that they've been acquiring. Now, maybe it works. Maybe I'm got unfounded concerns, but I'm pretty much going to be out at the next peak. So there you go. That's why. Just gotta. Now, could it not work? Absolutely, could not work. I mean, it's always a possibility that it doesn't work. So, alrighty. Oh, AA failed, and Tesla hit 150. Thought we might see just a little bit lower. That's why I drew the double dark. The double dark right there. Double dark spot right in the middle of the target that we failed to hit all the way back here a year ago. That's kind of funny. Come on, alerts to the day. April 18th, roughly right there. Man. Right back down. We came up shy of that target a year ago. Here we are. Right there, touching it. We could go just a little bit lower. 147 maybe. But we're basically right at support. Now, what happens if we get below? If we get below this 145 area, where I've got this alert sitting, if we sustain any kind of move below that, doesn't look too good. Doesn't look too good. Yeah. I've mined a bunch of Bitcoin. I'm not selling that till, I'm holding it till at least the 2030s when we have 7 figures on Bitcoin. And Bitcoin's like, it's hard for me to describe Bitcoin for normal people. Now, we have a fundamental change in Bitcoin coming where the supply hitting the market becomes more rare. You know, the for lack of a better term, like gold takes 60 years. Like it comes onto the market at about a 60-year rate, where the current mining production this year, it would take 60 years of the current year to replace the current total supply. All right. Bitcoin right now, today, has a supply replacement rate faster than gold's. There's never been a commodity ever in the history of humans that has been more rare than gold as far as coming onto the market, supply coming to the market. After tomorrow and the halving event, Bitcoin becomes 2 times more rare than gold for the first time ever. We have a commodity that is more rare than gold. And it's not about difficulty of mining. The difficulty doesn't change. All right. This is the subsidy of the supply coming onto the market. So that's a fundamental change. And there's several other fundamental changes occurring that have never been before on this halving. And we'll see what happens. There was one other thing in the history, one other thing that happened in the last, say, 150 years that is very similar to this, and that was the gold mark versus the non-gold mark. And if you go Google that and watch what happened with the gold mark as the fiat system in Germany was introduced. Anyway, jumping back over to what's popping and dropping. Ethereum, I'm not necessarily bullish on. I think they may classify this as a security. This has spot ETFs potentially happening in May here. And if we see them classify this as a security right in front of the spot ETFs, we could see a knee-jerk reaction back down to 1,600, possibly even on down further, possibly 1,000 or lower, maybe even like 400. That'd be a wild knee-jerk reaction. I would probably be a buyer down there. Be careful, don't knife catch, but I'd probably be a buyer. And yeah, that's what I got to say about Ethereum. DXY, still working on its pop up to this 108, 109 area right there. MSTR was on the poppers list. Now it's on the droppers list. Let me double check, make sure I've got the right list loaded. Yeah, was on the poppers list. Now it's on the droppers list. DHI, how things change in like 30 minutes. DHI was popping. Now it's kind of dropping. Looks like the market's going to be soft today. UNH coming back up to the roadmap line. If we can get above it, start looking like that maybe the bottom since it made the lower low. Could could be. Doesn't have to tag that 618, or I mean, doesn't have to tag the 1272 down there. Let's just clear all this junk. Clear all that junk off of that one. This has been a big time frame consolidation going here. And yeah, that high. At this point, this was the highest high, and that was the lowest low. 588. If we're going to get above this zone right here, that would be where I would expect UNH to go. Right there, above that 618. And let's just do a little statistic on this thing. 81% of the time, we go hit the 1272 when we set it up. So maybe like, how do you get that tool? That's a custom written tool. I don't have it available for anybody. It's I codified the market roadmap bounce with the 618 break and the 1272 target, and that kind of tells me the statistics on it for any given time frame. I can do it on all different time frames. It's a pretty cool dang tool. Looking at building it into something that would be available. So ZS came down here, support on further down. RYAAY looks like it's heading down to the roadmap line. Right in there. FRHC potentially going to bottom here at the 618 level. Let's see, make sure I got that correct. Yep. That would be a measured bounce potential right there. And then if it does that, potential move, we'd have to break back above this consolidation, which could take it on up to 112 and possibly even much higher targets. I'm going to fix this. Pull that over to the lowest low, possibly on up to like 144. That'd be pretty strong. Coin working on coming back. Thought we might do that. Remove that alert. Remove that alert. All these extra alerts hanging out here. Looking for it to come back and hit that roadmap line right there. May happen. I mean, kind of drew it off of here. And may happen over here. A little slightly higher high. These things have a they have a habit of doing the pattern. Like regardless, people argue with me all the time. Like I don't think you're right, and then the pattern happens, and then nobody says, "Well, it's kind of crazy." So TSLZ, short Tesla, popping, and that's a leveraged thing. Leveraged things don't follow patterns. So MVDX also leveraged and was on the poppers list. Now it's on the droppers list, or just the flat list, I guess. CVNA really looks like that's going to come back to the roadmap line right there. Sooner or later, we're going to probably come back in this zone. BPTH looks like piece of absolute garbage. Reverse split under $10, and it's biotech. It's like all the crap things going for it that basically makes it, not just biotech warning, but it basically makes it a dumpster fire. Let's be honest. This is dumpster fire chart right there. I wouldn't even chase it. Not with your money, not with my money. I wouldn't mess with that. eBay. Wow. What a volatile sucker. Remove the drawings. Let's see where we might be heading. Well, that's a giant corrective off of that low so far. Why would I say that? Look. 1, 2, 3. That's a 3-wave move up. 1, 2, 3. 3-wave move down. 1, 2, 3. 3-wave move up. At this point, if eBay were to move down to this zone, I would not be surprised in the least. That's a giant set of corrective moves, and it's taken, gosh, almost a year and a half, almost, we're getting close to 2 years that we've been working on this corrective move, It's basically a weekly chart thing here. It starts to be very clear here. Look, 1, 2, 3, 1, 2, 3, 1, 2, 3, and held the 100%. So what does that 100% mean? Corrective moves tend to be where, I mean, a large portion of corrective moves, the first move that it makes and this last move it makes tend to be about the same size, if not 1.272 bigger. So it has a resistance zone right up in here, right there. Now, something else that's very similar to this right now, DPZ, right here, hanging out just a little bit higher than hanging out right at that 1272. And if we turn down, that could be a bigger downturn in DPZ. Domino's Pizza. So watch out for that. That reminds me of what I'm looking at on eBay a whole lot. So, and yeah. All right, decliners list. RGEN, back to the daily. And nothing really to say there. Probably going lower. The support, Lee, man, stop picking up. Move my thing up just a little bit. Got a little gap down support thing going right there. I'm going to color it orange instead of red. Looking for that to return back down there. And it's biotech, pharma, med tech, FDA. You know, the U.S. FDA is involved. I don't like to trade it because it does crazy stuff sometimes. It doesn't follow the patterns. So DHR, if it's going to follow the pattern, I drew it. But I caution. I don't trade biotechs and pharma because they just don't follow the patterns like FDA approved stuff. If this one's going to break back above 249, we could run up higher. But again, medical specialty, FDA involved, NXPI, right back to the roadmap line. Look at that. Right off the one. Perfect. Perfect pattern. Right down to the roadmap line, out to the 1618. Had a little trouble breaking out, a little resistance. One day, popped it. I mean, beautiful. Then 1, 2, 3, right back down. That's a corrective move if we can hold it. So we move this up here and we pull this down here. So that's just the 2-point tool, this high, this low, roadmap line bounce. If we move back above this consolidation, it's funny enough, the 618 sitting right where we consolidated on the way down. Like this line didn't exist up here. It exists now down here, right in that consolidation. We break back above that at 249, possibly going to 276, maybe even 291, because last time we did bounce, we did the 1618. Right there, right there, water. Look at that. Beautiful potential. Market does echoes. So Elf Beauty, I'd love to see that touch the roadmap line right there. It's just kind of consolidating, although that's starting to look like 5 down, which may be a reversal of trend. So I'm going to be highly cautious on a bounce at this point. Tesla, we kind of briefly touched on because of the alerts. Looking for support. Earnings coming up next Tuesday. This could be a situation where we get a massive launch off of earnings. Last time, I pulled the statistics up. Last time we saw a massive launch on Tesla back in Q1 23. Q1 23, right back here. We were beaten down into those earnings. Got just a little bit of rally right in front of them. And then we went on a 50% gain out of those earnings. Right there. 50% rip. As Tesla was just beat down into those earnings. All right, everything looks pretty crap right now. I know. But what happens with the 50% rip? Puts us right back up here at 220. That'd be pretty wild, right? Pretty wild. So there's that kind of potential sitting there. You know, 77% of the time or so, we usually see a drop on Tesla earnings, but that 23-ish% of the time, we get a launch. And usually these moves last about 13 to 21 trading days after earnings. You know, this one over here lasted a few days, and we rallied, and then we continued the drop. I think the way I do the statistics when we do like a major reversal, I kind of end the statistics. So this one over here, we did a drop in that low, and then that was it. But then we continued the drop down here where we are now, right in the face of earnings. So, sit on support. Could be one of those opportunities where if you got long, it might pay out. I mean, it's one of those like don't risk more than you can afford to lose, but odds might be with us that we see a pop. Another biotech, pharma, medtech, that crazy pop is going to probably correct back out. TSM, looks like we're coming down to the roadmap line. 1, 2, 3, same sort of pattern. 1, 2, 3, and the 1, 2, 7, 2, it put us right in the roadmap line right there. Beautiful. ETSY, Etsy, just consolidating, holding the last line of support. Oh my goodness. If we break that, if we get below, do any kind of sustained move down, like these aren't sustained. These are just, you notice these pops down in here are all green. Even that one today, green. We'll have to get a red candle that kind of sustains a break below where we keep building support there. If we get that, we're probably heading on down to 50 on Etsy. And LAC, bouncing off the roadmap line, crushing it on down. Man, talk about a darling that fell out of Grace's. Holy moly. I do a split or something there. Yeah. None of my drawings make sense. I must have done a split or something in there. Wow. That looks pretty rough. This was high flying up here, 25. 618 bounce. Bouncing, bouncing off the roadmap line. This could be a measured bounce setting up here. Went a little deeper than I'd like to see, but if we break back above this right here, maybe the indication that we're going to go much higher in the bigger picture. We're talking years and years long pattern here. Could be on up here to 80, possibly 180. It's a very large range. Yep. And we could be talking like 2030, 2035. This could last like way on out here. RTO. But it all starts on the bounce. Right now it's not doing the bounce. Like it's sitting down here on support. We gotta get above. Gotta get above this. So it all starts up here, above $7, $8. RTO. Golly, man. Nasty 3-wave up and potential to go lower. Like if it gets below this stuff right here, the odds are we're coming down here to 21. LVS retraced right back down to, oh, look at that. GS firing off new entry potential. Airbnb firing off a new entry potential. The new 30-minute alert I'm working on. Let's go look at GS on the daily. Yeah, support's going higher. Already forgot what the other one was. ABNB. Yeah. Also support's going higher. Beautiful right there. BX coming back down. Not far to the roadmap line at this point. That high. Kind of double top there. So we've got that high, that low. If we tag the roadmap line, move back up through 127 would set us up for 137. And bias for the day. I'm actually optimistic that we find a bottom here. This has been overly beat down. Everything is getting We're actually hitting some metrics that we haven't hit since 2022 when we were down in the bottoms, down in the doldrums. Like this right here. Look at the last time we were down this far. Right there in 23. Before that, pull it on over. Right there in March. I mean, we're approaching reversal levels here. Right, that stock's about, above their 20-day, which when you have only 7-8%, that's pretty dang low. The bottom yesterday was 6%. Back in October, we bottomed at 4%. Here in March last year, 4%. Down here, we actually made it down to 2%. So we're in reversal territory. All right. Some people like RSI and all that stuff. I like this right here because it just kind of tells you what the market's doing right here. And this is the actual stock performance. And does it lag a day? Yeah, it lags a day. But this is time to be hunting for opportunities, at least for an intermediate bounce. Could we go lower after a bounce? Sure. I mean, we did it right back over here. We came down in the zone, bounced up, way up, almost to 80, and then right back down to the bottom. And what did that look like? For those of us that might not have the memory that long, right here is what it looked like. That was this bounce right here. Right there. Could you have made money on that bounce? Yeah. Did it go higher? No. Did it come lower? Yeah. And then it made the final low. So be careful out there. All right. It's not being wrong that costs you the money. Stay wrong. Don't stay wrong. If you're getting short, don't stay wrong on the face of a rally, okay? Like this thing can go pop and make a new high. Like this could be enough correction that we flushed it out enough that we could go ripping off and make new highs up here at 5,300. It could. The line in the sand, the tail is getting back above this 5170 area right here. That resistance. Gosh, we were just there 4 days ago. Everybody's super bummed out already. 4 or 5 days ago. 6 days ago. Last Friday. So be careful out there. All right. We'll talk to you later. Have a good day. Stay safe. I'll be in Discord. If you want to come hang out, link is in the description. It's like $5. If I said anything that was helpful, give me a thumbs up. Give me a like. Share with somebody that you think might find this information beneficial. And have a good day. I'll see y'all later. Bye for now.